Today, we're going to do something a little different. We're going to break down the anatomy of a global crisis. Now, to do this, we'll be looking at a fictional conflict, a hypothetical war set in 2026, but we're using it to expose the very real fragility of our global economy. And it all kicks off with one simple, kind of terrifying question.
I mean, really think about that. You wake up tomorrow, and that's the headline. Not a slow decline, but an instant, jarring shock. A full fifth of the world's oil, the very lifeblood of pretty much everything, is just gone, off the market. So what happens next? Well, in the scenario we're exploring, this massive supply shock wasn't caused by a bunch of different things. Nope, it all came down to a single event, the shutdown of one critical maritime passage. That one closure instantly choked off a huge portion of the world's energy supply.
And that one event brings us to a single, incredibly vulnerable spot on the map. Let's dig into how this one place has the power to basically hold the entire global economy hostage.
The term for this kind of place is a maritime choke point. And the one at the very heart of our fictional crisis happens to be the most important one on the entire planet, the Strait of Hormuz. It's just a narrow stretch of water, but wow, its importance is just impossible to overstate.
I mean, just look at the sheer volume of stuff that goes through this one strait. We're talking about a fifth of all global oil and a fifth of all liquefied natural gas. So when this one point closes, it immediately triggers what the International Energy Agency would later call the largest supply disruption in history. Okay, so the choke point is sealed. The first domino to fall isn't halfway across the world. It's right there in the region itself. Let's look at the immediate and absolutely catastrophic collapse right at the epicenter of the crisis. The impact was instantaneous. The Gulf states rely heavily on food imports, and overnight, 70% of that supply was just gone. This wasn't just an economic headache. It was a full-blown humanitarian emergency just waiting to happen.
And if you think that's bad, it gets so much worse. The conflict also went after critical infrastructure, like the desalination plants that provide nearly all the fresh water for countries like Kuwait and Qatar. Strikes on those facilities threaten 99% of their drinking water.
With all the sea routes blocked, basic goods like food had to be flown in, and that costs a fortune. That cost got passed directly onto shoppers, with grocery prices spiking by as much as 120%. But beyond the empty shelves and soaring prices, there was this massive psychological blow. The crisis completely shattered the story the region had been telling for years, that the Gulf was a stable, safe hub for business. The result? A huge exodus of the very foreign talent that their economies depend on. Now, a regional collapse this massive was never going to stay regional for long. It immediately sent a shockwave across the entire planet, and that's when the first major global domino fell, the global energy shock. The effect on the energy markets was, as you'd expect, immediate and incredibly dramatic. Brent crude oil, which is the global benchmark, shot up from around $80 a barrel to over $120. The markets were reacting to millions of barrels of oil a day just vanishing from the global supply. But here's where it gets really interesting. This shock didn't hit everyone the same way. In Asia, huge economies like China and India were dangerously exposed. They were relying on that one strait for 3/4 of their oil. Meanwhile, in Europe, the problem was totally different. They'd just come off a harsh winter, and their natural gas storage was already at a critically low 30%, leaving them with zero cushion for a supply shock. So far, we've mostly talked about energy, but the disruption goes so much deeper than that. Now we get to the hidden dominoes, those secondary supply chain crises that are easy to overlook but are just as critical.
Just follow this invisible chain reaction. The strait closes. That halts nearly half of the world's exports of sulfur and urea, which are key ingredients for fertilizer. So fertilizer prices double. Then crop yields start to fall. And the end result? Everyone, all around the world, starts paying more for food.
And it's not just fertilizer. The region is a key source for a ton of other critical materials. The price of helium, which is essential for making semiconductors and running MRI machines, it tripled. Supplies of aluminum and tungsten, which are vital for manufacturing and defense, were also hit hard, sending their prices soaring.
So let's step back for a second. When you add up the energy shock, the food crisis, and the materials crunch, what do you get? You get a new and frankly pretty brutal economic reality. Let's try and pull all these threads together to say what the global aftermath really looked like.
The pain was definitely felt everywhere, but it looked different depending on where you were. Europe was staring down the barrel of stagflation,
that really nasty mix of rising prices and a shrinking economy. Asia was just grappling with these severe supply disruptions. And in the Americas, the most visible sign was inflation, with gas prices in the U.S. jumping to $4 a gallon as fears of a recession started to grow.
And the financial markets? Well, they did exactly what you'd expect them to do. They recoiled. As all this fear and uncertainty took over, investors started selling off stocks and bonds and just fled to the safety of the U.S. dollar. It was a classic flight to safety, and it just made the economic damage that much worse for everyone.
And that really brings us to our final thought here. This entire scenario, top to bottom, was fictional. It was a thought experiment, built from analysis of real-world weak spots. But it serves as a pretty stark reminder of how a single point of failure can set off this cascade of crises. And it leaves us with a really critical question. How resilient are we, really, to the next inevitable shock?